Hi, I'm Bob, the Mortgage Coach Mitchell. Thank you for tuning in today. Today is video 5 of a series on the step-by-step process to successfully buy a house. The first 4 videos consisted of how to free up money to save. Okay. The second one was how to force yourself to save it, how to make sure you really do save it. The third one was getting your credit in order. The fourth one was your income and job situation, what you need to do to be able to get into a mortgage, what your situation needs to be, and what the various options are. And then this one is on getting pre approved for your mortgage. Okay. So if you've made the decision, you've already gone ahead and saved up some money, you got your credit cards paid down, um, you've been on your job for a while, and your employment stable and your income stable. The next step is to go ahead and hook up with a lender. All right, when you go to talk to the lender, you're going to have a number of different choices. There are almost as many mortgage companies out there as there are real estate companies. So you'll have an abundance of choices to make. But basically, they're going to fall into one of 3 categories. They're either going to be a bank or credit union, they're going to be a mortgage company, or they're going to be a mortgage broker. Okay, bank or credit unions historically have not been in the long-term mortgage business. You know, if you go back to the 30s and 40s, they would lend you a 3-year balloon to where every 3 years they would renew it. Um, that's no longer the case. Most banks have mortgage departments that are hooked up, and they do the exact same thing that mortgage companies do. Sometimes just like a mortgage company, sometimes they retain the servicing. That means you're going to be making your payment to First National Bank of Decatur or First National Bank of Omaha or whatever. Okay. Mortgage companies are the same way. Sometimes you're going to originate your mortgage with a Rocket Mortgage or a one of the online lenders or one of the big mortgage companies. Guaranteed. I used to work for Guaranteed Rate. Okay. Generally speaking, they're after the servicing because they get paid to service the mortgage. That is to collect the payments and to make sure that the insurance and the taxes are paid. And unfortunately, if it comes down to it, they're the ones that are going to foreclose upon you. Okay, so the banks and mortgage companies can be very, very similar when it comes to 30-year fixed rates. Banks do tend to be a little bit more conservative than mortgage banking companies. Okay, the third option is going to be a mortgage broker. Now, what a mortgage broker does, we're not after the servicing. I do not serve, and I'm a mortgage broker. I do not service mortgages. Okay, I'm not interested in collecting and making sure your insurance is paid and everything. That could be a very profitable business, and I can't say that someday I might not get into it, but right now I concentrate strictly on originating mortgages. I'm a specialist. Now, as a mortgage broker, I feel there are certain competitive advantages. If you're a loan officer with a credit union, a bank, or a mortgage company, I definitely encourage you to leave a comment and to make your case on why you might be better than a mortgage broker. But in my particular opinion, I've been in the business for 38 years and I've worked for mortgage banking companies. I've worked for banks. I've also worked for mortgage brokers. I was a mortgage broker when they very first came on the scene. I'm a big fan of being a mortgage broker because it gives me a certain amount of flexibility. Okay, let's say that you just get online and you find a mortgage company that has got a really good rate, and you go ahead and you make application. Well, there might be a case where you're just not the type of borrower they're looking for. It's not that you can't get a house financed, but let's say that you got some hair on you because you fell down 2 or 3 years ago and you broke your hip and you were in the hospital and weren't able to work for a while. Okay. You fell down, you missed some payments, that sort of thing. But since then, you've recovered, you've gotten back on, you've paid your bills back on time, you got your credit score back up a little bit. But you can't deny there was a point there where you had some hair in your credit. Okay. Well, as a mortgage broker, I get to know my investors pretty well. I know what they're looking for. If an investor's looking for a pristine deal that doesn't have any hair on it, and you've got hair on yours, I know not to take you to that point. Well, if you're shopping for rates and online and with the banks and with the mortgage banking companies, you don't necessarily know, and it's not in the loan officer that you talk to. They might not necessarily have your best interest at heart, and they might throw it against the wall to see if it sticks. Whereas with a mortgage broker, I'm going to be able to take a look at your credit report and your income situation and everything that goes into you as a borrower, and I can match you up with the particular investor that I think is going to be best for you. Okay. It also gives me a certain amount of flexibility in that if the underwriter doesn't agree with me, okay, or something comes up. I'll give you an example I've already talked about in one of the other videos. I had a deal here not too long ago where the appraiser blew it. Okay, we had a contract on the house for $249,000, and the appraiser came in at $205,000, so 40 something thousand dollars less than what the buyers and the sellers agreed to pay for the house. Now, I looked at the comparables. I underwrote the appraisal. I looked at the comparables, and I did not see any reason on earth why that house should not have sold for 249. Okay, matter of fact, I think they got a pretty good deal on the house at 249. So anyway, unfortunately, the appraiser didn't agree with me. Okay, and we went for a reconsideration of value, and the appraiser was they stuck their guns, and the appraisal management company on that particular investor, who shall remain nameless. If we happen to be the one that's, if you're watching my video and you happen to work for that mortgage company, you need to get your act together. But anyway, they didn't hold the appraiser's feet to the fire, and they didn't even really give any serious consideration to a reconsideration of value. So if we had been a regular mortgage banking company, or I've worked for a bank, I would have been dead in the water. It would have been anything I could do. We had a bad appraisal. The only thing that would have happened is your deal would have been dead. Being a broker, I was able to pull that deal back and go to a different investor. Now, I did fully disclose to the new investor that there had been a low appraisal before, and we ordered a new appraisal, and they went ahead and they went into it, and we got an appraisal that came in, I think, at 247. So we did miss value, but just by a little bit. Okay, but anyway, we got that deal closed. We closed it just a week or two ago. Where if those people had gone to a mortgage company or a bank, there's probably a chance that you wouldn't have gotten that deal done. Now, as far as interest rates go and everything, usually mortgage brokers are going to be more competitive, or at least in the same ballpark as a bank or a mortgage company. Online lenders, they don't pay their loan officers a big commission, so they can be pretty competitive as far as the price goes. But you're not getting a commission loan officer who's got an economic incentive to see that your deal closes. So anyway, this is probably the closest I'm going to come to a sales presentation to you. I want this channel to be educational in nature, but I will tell you that in no uncertain terms, I'm a fan of being a mortgage broker. After 38 years in the business and having worked for all three companies and having a pretty good reputation in the business, I could go to work for any kind of mortgage company I wanted to. I chose to go to work for a mortgage broker because of the flexibility and the fact that my rates are usually pretty competitive. So anyway, those are going to be your choices. The big choice that you need to make is to go ahead and get pre-approved, though, prior to putting a contract, prior to even going and looking at the house. That way, if something surprising does come up, you can go ahead and get it fixed without the pressure and the economic danger of losing earnest money and due diligence and appraisal money that comes with not being pre-approved. So definitely hook up with an experienced loan officer. If you have a real estate agent that you trust, or maybe know a couple of real estate agents, everybody does, ask them for some referrals. Do your homework, read the reviews, talk to previous clients of that particular loan officer, but definitely get pre-approved, because that gives you the opportunity to fix something. And even if you think you're a perfect borrower, you might be surprised. We're going to turn over every stone in the creek before we do the mortgage. So you might think that you're a perfect borrower, but then boom, something comes up that where you're not. You think, oh, I got 825 credit scores, but you know what? Your business, the company you work for just went bankrupt. Well, how are you going to work with that? That's one of the reasons why you need to get pre-approved. I'm Bob, the Mortgage Coach Mitchell. Thanks very much for tuning in. If you have any questions about being pre-approved, this is probably one of the biggest things I'm going to point out to you. Don't blow this off. Get pre-approved before you go in and start looking at houses. So I'm Bob, the Mortgage Coach Mitchell. Now let's put you into a house. Bye-bye.